Okay, so coming up next on the Short Vol Show Live, why it's actually a smart move by the president to oppose Jerome Powell on the rates hike, why UVXY could actually go way higher in the coming future, and why I am short UVXY right now, plus some ideas for getting long the market for once the clouds actually clear out. Join me. All right, so welcome to the show today, and we are a little bit into the session, although today it's all about the Fed and whether they're going to hike rates. Now, President Donald Trump has come out against Jerome Powell hiking rates. There is a tweet talking about how he should just something about take the victory, and there's been a lot of discussion back and forth, and some of it has been partisan. And as you know, I try to stay out of that stuff as best I can. But let me just say that when we think about this, the president has more on his mind than just the market going up and down. He has political concerns as well, and any president would. And when you think about it, coming out against the rate hike is actually kind of a smart move because it gives the president some cover if they do raise rates and then the market goes south anyway. It gives the president a little cover because he can come back later and say, look, you guys shouldn't have done that. Now, what's this whole rate thing all about? Well, it's all about confidence in the markets. They generally raise interest rates when the markets are doing well and the economy is heating up, and it's to keep the economy from heating up too quickly, to keep inflation from going higher, and it kind of slows things down a little bit to keep tabs sort of on the economy. So when things are doing well, they raise rates. It makes money a little bit harder to borrow for companies. But at the same time, those who want to save money, they get a higher rate of interest. Sometimes when we think about interest rates going higher, we only think of it from the point of view of somebody who's trying to borrow money or somebody who owes debt to, like, for a house. But there's also the other side of it, which is when they raise rates, the people that actually are loaning out money can make a better interest rate. And that's not always the big institutions. It can be you or I who's putting money, say, in a interest-bearing account or is in some way or another on the other side of that transaction. So raising rates is not always a totally negative thing for everybody involved. It's negative for the person that's borrowing, but it's positive for the person who's lending. That being said, as the economic cycle moves on, it goes from loosening and lowering rates to tightening and raising rates. And we've been in a very low interest rate environment for years. And there's a lot of feeling among economists that we need to, sort of raise to get back, at least back to sort of an equilibrium level. We know a few years back, Japan was in negative interest rates, and we were hanging out around zero. We know that the government has to take a bunch of that QE stuff off its balance sheets because we need to kind of reset things when things are doing okay. Otherwise, we have no arsenal to protect us when there is a market downturn. So there's expected to raise rates today. It's like over 90% expected to happen. And there's been a lot of commentary about, well, okay, if they do raise rates, then that means that the Fed does have confidence that the economy is doing well, and that's a bullish thing. If they don't raise rates, then that ultimately means that the economy is not doing as well as the public or the Fed felt it could have, and thus they're taking a breather from raising rates, and that's actually means that the Fed is signaling that the economy isn't doing well or is doing worse than expected, and is actually kind of a bad thing. At least that's kind of the way I interpret it right this second. Let's talk about UVXY for a second. The VIX is way above the futures right now, and we saw yesterday as we came into expiration today, the VIX up and UVXY up, of course, and the E-minis up. And part of that had to do with the fact that on expiration, the front month future has to converge with spot. And so if it wasn't expiration, the front month future probably would have stayed a lot lower down. But because it was expiration, it was forced to converge with spot, and that brought us into this strange situation where we were in like over 10% backwardation just for a brief period of time. If we look at the term structure now, we can see that spot is way above the futures still, and it's coming a little bit today, but still way above the futures. And thus, if it were to stay this way for an extended period of time, these futures would be pulled up to spot, and UVXY would move a lot higher. The structure as it is kind of indicates that an anticipation of vol coming in a little bit in the coming soon. If the VIX were to stay here, these futures would be pulled up to it, and UVXY would go a lot higher. However, regardless of what the decision is today, there is some anticipation of vol coming in, I believe. And it may be only like a temporary thing where it comes in for a day or two, kind of like it did after the midterm elections, and then just pops right back up. But regardless, we should see some relief on the news today of the interest rates coming in. So I took sort of a short-term short just through this event here by buying the 18 Jan 67.65 put spread small. So we can take a look at that really quickly. I'm in ghost form again so that you can kind of see behind me on the charts today. And let me see if I can actually ghost out even farther here so you can see it a little bit better. Let's see. So if I go like this. And there, it goes out even a little bit further. Okay, so if we look at UVXY chart here, and we go to Jan, I bought the Jan 67 put, and I sold the 65 put against it. Okay, so that's a $2 spread. So at most it can be worth $2. Right now the midpoint is $1.10. So if you wanted to put the spread on right now, you might have to give up a teeny bit of edge. So instead of paying the midpoint, which is $1.10, you may have to pay like, I don't know, something like $1.13. You would probably get filled on that one. I had a little bit more of a conservative trade on for a while, which was I sold the Jan 76.80 call spread. This would be a little bit more of a conservative play. You've got $7 of running room where you're still a winner, and you have 30 days for it to be below 76. Right now, UVXY 69. So that's a little bit more conservative. You could probably sell this. Right now, the midpoint's $1.05. You could probably sell this for $1 right now. We're going to see what happens. UVXY down about $3 today, and the VIX down $1.20. I'm sorry, a 0.20. If we look at the VIX, we are at a pretty high level in recent memory. Here's actually just the UVXY chart, and you see it the highest it's been in a while. If we do go to the VIX, and let's see, I'm not linked here. All right, let's link up. Go to the VIX. We see it, it got up to 27 and change on that October 9th through 11th period, and we haven't actually gone higher than that here. But, VIX up above 25. I'm looking for a little retracement on the news, regardless of what it is today. Meanwhile, in other news, we've seen Tilray pop today and yesterday on news. It went from 65 and change, I believe, to 75, and got up to 80 this morning. And I've been looking at some scoops here to slowly chip away and put on a little bit of a long position as stuff gets to more reasonable levels here. I made a little list of some stocks to watch. I would recommend doing this. Set up little separate lists for yourself of different categories of stocks to watch. But I purchased this XOP a little bit. XOP is it's like an oil and gas ETF. That there was a lot of activity in here recently. There were call buyers in here, and then there was this spread that went up 100,000 times, which it's hard to tell if it's bullish or bearish, but a spread went up 100,000 times in here. Anyway, I bought this small. If you see the chart, it's just way down from where it was. The other ones that I looked into were J&J. Now, J&J had a scandal with talcum powder, saying that their talcum powder could be, I think, carcinogenic. And it was this big scandal, and you can see they're really ripped down. And there was an interview with Jim Cramer with some executives yesterday, and I just think maybe it could be overdone here a little bit. I've talked before about how J&J is really a darling of the stock market, and I anticipate it recovering at some point. Other ones to consider might be, Costco. A lot of issues have this big down move. I was watching another report that was talking about how a lot of hedge funds have gotten out of a lot of illiquid stocks, and many of these illiquid stocks are really depressed now. I was looking at this other one, ABCB, which I don't really know a whole lot about, but thin volume, but many have this way huge down move on them, and I think these have to come back a little bit at some point, some of these issues. I was looking at Kimberly-Clark, which has actually done pretty well throughout this whole market. And if we go back to our FANGs, I was looking at this one, FNGU, which is a leverage FANG ETF, and I bought this a little bit. And we'll just have to see what happens. It's way down. The FANGs have gotten so beat up that I figure we have to have a little bit of relief here somehow. I don't think the market's going to necessarily make new highs, but I'm just looking for a little bit of relief from the down move here at some point. Have buyers come in. That thing that Don Kaufman was talking about, this huge vol explosion, if we got below a certain point, didn't really happen. We've crept lower, but it hasn't resulted in a vol explosion. It's just crept up a little bit, volatility. I think people are getting used to the market selling off now, and it's not like there's one point where everyone says, oh no, the market's really selling off now, I got to get out. It seems like people are kind of used to the crunching down moves here. So be careful out there. It is a big decision on the rates today, and there should be some fireworks when that actually comes out. But we have had several down days in a row, and it seems like there should be some relief out here at some point. Anyway, thanks for watching today, and stay in touch. And I hope you can make some money. Happy holidays if I don't talk to you before then. And I'll see you on the next one on the Short Vol Show Live.